welcome to Biztech's Inside Trading Show. This show is all about trading. Every week we will discuss what trading is all about and what are the required habits to make you a successful trader. Now, we'll also share trading ideas and themes to really help you make money. With me today is my co-host, Phan Vee Leung. He's the founder and CIO of Track Record Asia. V, welcome to the show.
Hey, it's good to be here again. Let's talk about markets.
Now, the first thing about markets I think we need to remember is trading is really about right-sizing your trade. Now, according to your individual circumstances and budgets and so forth, V, can you enlighten us as to what this means from a practical standpoint?
Yes, Brian, that's an excellent point that you're making. I think one of the biggest mistakes that most investors or traders do is that they tend to over allocate their capital to a certain trade, right? It becomes too much of a gamble, right? Basically, they go all in on whatever trades they are convicted about, whatever they're convinced about, a tip, some research, or just a report, and then they allocate too much of their capital to it, and that is a huge problem in that you basically are betting everything on one trade. And of course, you see that on TV, you see that in the movies like The Big Short. I think it's a glorious way to make a fortune. But of course, they're showing you the success stories, right? They don't show you the million people who did the same thing but got crushed before the markets turn. And that's the case. That's the thing that you have to avoid, because if you have an edge on the market, you have a process that allows you to have an edge on the market, the ability to make money over long periods of time. You should never bet all your savings, all your bankroll, all your capital on one particular trade, which can be, as we have seen in many instances, which can be vulnerable to random headlines, random news events, right? For example, even if you have the best trade on earth, if somebody shoots a missile somewhere, or somebody flies a plane into a building somewhere, you could be taken out in matter of moments, in matter of hours, right? Before you could do anything about it. So the rule is never to risk so much on the trade that it could cripple your whole capital, right? Whole bankroll. So you should allocate your trades, your risk, your capital to each trade no more than, I would say, as a rule of thumb, just somewhere to start off, no more than 2-3% of your total capital, right?
Wow,
and
so that's an interesting thing, 2 to 3%. In my mind, I was thinking more like 10 to 20% as a maximum. 2 to 3%, huh? That's something to really keep
yes.
In mind.
Yeah, because if you do, of course, it really depends on how much leverage you want to be taking, right? But I think as a start, 2 to 3% to start, and then as it starts to perform, it will grow into a bigger part of your bankroll. It will grow into a bigger part of your capital, right? And you have to understand what most people don't understand is they tend to risk too much to make too little, right? So my philosophy is to risk a finite amount, a fixed limited amount, to make a lot, right? So if I'm looking to make risk 3% of my capital on a trade, I'm looking to make multiple times of it, right? So that is not bad. If it's 3 times on it, you're making 9%, close to 10% on return on your total bankroll, right? If your savings increase by 10% on one trade, it's great, right? It's over long periods of time. And actually, in as we have said before, right, the key to trading is to risk legitimate finite amounts of money to make multiple times of what you're risking, right? It's not to risk massive amounts of money to make a little bit, right? If I think most people can do that anyway. Even if you buy a bond, or you just put your money in the bank, you can do that anyway. So the key is the purpose of having this rule is so that you don't risk all your capital on one particular trade. Don't have too concentrated risk. And I say 2-3% is because people tend to have many trades that expresses the same view, right? Okay. So if, for example, somebody is bullish on tech, they will have like 10 tech stocks in their portfolio, right? And they
Right.
think, oh yeah, it's 2-3%, but it's actually more than 2-3% because
Yeah,
you're
it ends up, if
across
it's
the
10
board.
times 2, it's like 20 to 30%.
Yes, yes, I'm sure. Of course, now we've experienced a very bearish market for the last 1.5 years, and I'm sure when I talk about this, a lot of people realize this, that they have it now, right? What a problem that most traders tend to have, most investors tend to have, is that when markets are going their way, they feel like they have not enough risk on, right? But they forget the time when the markets are going against them. They have too much risk on. They're always like, I've traded too much, I've traded too big. So the key is to find the sweet spot, right, where you're almost not bothered by the day-to-day movements, right? Because as you shouldn't be, right? Because day-to-day movements is pretty much random. You don't really need to be watching the markets all the time. You should have a life. And if you're, and a key a rule of thumb, if you are worried about your trades, you're worried about your portfolio, then you are having too much risk, right? It starts to affect your sleep. You're having too much risk. You start to dream about it, having too much risk. So key to that is and this is across all cultures that have all the countries that I've worked in, all different dealing rooms. And if you're starting to pray about your positions, you're starting to trying to appeal to a higher authority to save your positions, your risk is too big.
Wow. Okay. That's really some practical advice, I think, for us to keep in mind. But V, one of the key things I want to talk about for the rest of the show is really the key trend in 2023, which is around the US dollar losing its dominance. So countries are starting to want to trade either in yuan or in their own currencies. What currencies and commodities are likely to see the impact of this US dollar de-dollarization?
Yes, this is an excellent point you're making again, right? I think we spoke last week about the Chinese authorities, the Brazil, they're making trade pacts to trade in their respective currencies. And now we've heard from Macron of France that they want to reduce their reliance on dollars as well. So I think this is a theme that is going to be further developed as the year progresses. We talked about being invested in the Chinese yuan last week, and today, this week, we can talk about, as you said, gold. I think many central banks are diversifying their FX reserves, the currency reserves, into gold as well. China has been buying record amounts of it over time, and from the chart, it's quite obvious that it's breaking to close to the previous highs of around 2070. Right now, we are trading around $2,000, and I think from the charts, technically as well as fundamentally, it makes sense to be buying gold on dips, right? On the premise that the dominance of dollars will be reduced over time. And another alternative to that is silver. Silver currently trades around $25. The all-time highs was around $50, and we're halfway there. But on the charts, technically, on the monthly charts, the weekly charts as well, it looks very good that it has broken above technical resistance. And I think if the banking crisis, which for now seems to be over, but the solution to that seems to be from the central banks and authorities, seems to be again another form of printing money to support the banks, giving them unlimited amounts of loans, trying to save their bond portfolios, which is underwater. It essentially almost amounts to I believe, of course, they don't say it is. I think it's quantitative easing. And as we've seen before, when money supply, when they print a lot of money, print a lot of dollars, finite amount of goods that's denominated in dollars will see the dollar prices go up over time.
V, on that note, that's it for this week's Inside Trading Show. Thanks for coming on the show, V.
Thank you. As always, it's a pleasure.
Now, we've been speaking to Phan Vee Leung, the founder and CIO of Track Record Asia, on Biztech's Inside Trading Show. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.